Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, November 7th, 2019. Here are our top stories. A look at cryptocurrencies around the globe and some of the regulatory hurdles that exist for cryptocurrency. Cryptocurrencies like Bitcoin, Ethereum, and Ripple, and the underlying blockchain technology have gotten the attention of institutions and central banks around the globe. Here to discuss this with me and give us an update, Kevin Kelly, co-founder of Delphi Digital, a cryptocurrency research firm. Kevin, great to see you again.
Great to see you too, Jeff.
Yeah, it's good to have you back. And, you know, we always go around the globe to discuss the issues related to retirement and the markets. Thought we would take the time in this first segment to talk about what's going on around the globe in cryptocurrency, because there's a lot going on in China, not only just in the US. So why don't you kind of start and take us through what's going on?
Yeah, for sure. I mean, there's a number of ways you can kind of, decide how to look at crypto innovation or the regulatory stance of a lot of different countries or regions around the world. I mean, you mentioned China. That was obviously some pretty big news over the last week or so. You basically had Xi Jinping come out and say that they were focused or going to be more focused on bringing blockchain technology, integrating into their economy, just having it basically be a huge kind of technological priority of China. There's a lot of people kind of reading between the lines here, and obviously there's a lot of kind of discourse going on between mainland China, and then you've got obviously all the issues going on with Hong Kong.
Yeah.
So some people on one side say that this is certainly a great innovation. This is a really kind of easy scapegoat for people to use and say, listen, this is what China is focused on. Why isn't the U.S. kind of keeping pace or doing something similar? On the flip side, it's a lot of people that are reading between the lines and saying, it's really more so because China wants to clamp down on their citizens even further, add surveillance features with some type of central bank digital currency. So again, it's kind of depends on how you look at it or what seat you're sitting in. But all in all, I think when you compare something like China that's really again is trying to progress forward, and I think it's tough to discount the amount of investment they put into things like AI, 5G, and now kind of blockchain technology is certainly something that's pretty interesting. When you bring it back to the U.S. here, the big news recently was you had Mark Zuckerberg testifying in front of Congress talking about Libra. A lot of the focus there was more so on Facebook and things of that nature. But again, the regulatory landscape is still developing. I think in the U.S., we've overstepped a little bit in terms of stifling a bit of the innovation. You're starting to see companies move abroad because of that. But at the same time, it's not to say that it's something that the U.S. can't recover from or can't make more attractive to open up blockchain or crypto-based businesses here.
Yeah. Well, I want to ask you about China. You mentioned some of the geopolitical implications here that we're not really going to tackle. I think it's important for the audience to know that, of course. One of my questions is about, is this an opportunity? We've talked in previous episodes about blockchain and opportunistically for the central banks. Is this an opportunity for China to supplant the United States and King Dollar in terms of the reserve currency? I mean, is that a play here? Is that something that the United States and others around the globe should think about?
Yeah, no, I think you hit the nail on the head. I think that's certainly kind of the underlying motivation or intent behind a lot of China's focus on creating some type of digital currency. And again, you can argue whether it's a true cryptocurrency, which obviously we wouldn't, or if it's a digital currency. But at the end of the day, I mean, if you're trying to create or upend King Dollar, as you say, as a global reserve currency, one of the big kind of keys to that is getting the yuan in more people's hands, right? Globally, in more consumers' hands. Actually creating an open investment environment where it could serve as a global reserve currency just based on Chinese government debt, things of that nature. So I think a digital currency, and then you could obviously think about all the things that can be built on top of that. Then if you had some type of, let's say, sovereign bond market that was much more digitally focused, you can slowly start to see how China is trying to put together the pieces to upend the U.S. as the global reserve currency for sure.
Yeah, thank you for that, Kevin. And, just kind of keeping track of the news, you look around the globe, I think there was some news out of Germany that they are establishing a national cryptocurrency. Any thoughts on that? And also Russia, I think, was making a play there. So any thoughts on either of those two?
Yeah, so for Germany, it was more so actually them proposing to digitize something similar to what China's doing, trying to digitize the euro, right? Because there's a number of different benefits to do that. It was actually more in regard to trying to ban or block Facebook's Libra and from the Libra Association because they see it as a threat, as we've talked about on the show before. They see it as a threat potentially to kind of the sovereign or independent nature of central banks. Certainly, it could be a competitor to central bank. They're not going to be Libra's or Facebook's not going to be setting monetary policy for these fiat currencies. But at the same time, if you have some type of association that decides or votes on what currencies get into a certain reserve basket, and if that reserve basket or Libra really takes off kind of on the global stage, you can see how Libra would have a significant amount of influence when it comes to what could potentially be the next global reserve currency. So that news is more so around I would say not necessarily protectionist policies, but more so trying to insulate the potential effects of something like Libra from the euro. Because obviously, monetary policy is still front and center for a lot of countries, regions, central banks, and to think that they're not going to go down without a fight or give up power, just at the drop of the hat, I think is certainly a bit naive.
Yeah, absolutely. And you mentioned Mark Zuckerberg, Facebook, and Libra. You've talked about it throughout this segment. He testified. He's gotten a lot of pushback, or not he, but Facebook's gotten a lot of pushback. And I want to save regulatory for our second segment. But any additional thoughts there in terms of some of the other players? Bitcoin has had some recent improvements in terms of its performance. But are there signs that the competition is nervous about Libra, even though it's getting pushback from the U.S. government, some of the regulatory agencies, as you intimated?
Yeah, I mean, there's a bit. I think anybody who is, decently well versed in this space understands that there's a huge difference. They almost don't deserve to be in the same sentence between what Bitcoin is essentially trying to accomplish versus something like Libra. But when it comes to, talking about competition and bringing it back to kind of central banks and their outlook or their policies, I think Libra is still largely misunderstood, ironically ironically, the policymakers in the U.S. are kind of on the forefront of, stifling that innovation that's going on when actually that could be the saving grace of the dollar, because we talked about a number of reasons or challengers to the US dollar that are going to be popping up or slowly kind of building in the background. So when it comes to competition, I mean, if anybody else really decided to go with some type of Libra project, I think it'd actually have it would have a much warmer reception. It's just the fact that Facebook's name's attached to it, which obviously comes with a lot of scrutiny in and of itself. But I mean, when it comes to competition, there's not really anybody who's out there who's built out or has developed to the degree that Libra has some type of global kind of medium of exchange. So I'm sure we'll start to see some type of competitors pop up in the what we'll call stable coin type space. But for now, I mean, it's kind of Facebook and Libra's to lose.
Yeah, thank you for that. Last question. We've got about 40 seconds for this segment. When we talked several months ago on the podcast, you had talked about some endowments and pensions, I think, investing in cryptocurrency. You and your firm do a tremendous amount of research and churning out research. Is there any update on that? And again, we've just got about 30 to 45 seconds left in the segment.
Yeah, I mean, we've continued to see the trend. You've started to see a few more institutions funnel into kind of the top of the funnel when it comes to crypto assets, really kind of focused on Bitcoin. But you are seeing a continued trend on the private side of things where you have seen a number of institutions, whether it's pension funds, endowments, things of that nature, or I should say funds of that nature, piling into some of these more kind of venture funds or venture capital focused firms. So I think the private side of things is going to continue to develop, continue to grow. But when it comes to kind of the publicly traded crypto markets, I mean, it's still very largely retail driven.
Yeah. Kevin, stick around. And when we come back, we're going to talk to Kevin about some of the regulations around cryptocurrency here in the U.S. that may be stifling innovation. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back, and today we're focused on cryptocurrency. And while institutions, central bankers, and individuals are focused on digital assets and how they can be used, so are regulatory agencies. What does that mean for cryptocurrencies here in the US and abroad? Kevin Kelly, co-founder of Delphi Digital, remains with us to discuss. Kevin, thanks for sticking around with us this morning.
Thank you. Thanks for having me.
Well, always a pleasure talking about a new asset class, innovation, especially. You talked in the first segment about what's going on around the world and intimated in your comments about the regulatory environment. Let's focus on that because I know that a lot's going on, not only here in the US, but also abroad. And also the Internal Revenue Service issued some guidance, which I saw some legal guidance around taxation. So why don't you take us through what's going on if we can? And we only got 6.5 minutes, but let's see what we can do.
Yeah, it seems like all these topics we could talk all day about, right? No, but I mean, starting with the IRS, as you mentioned, you have seen some more clarity come around for investors and traders of crypto assets in terms of how to actually recognize some of those gains or losses, for that matter, on the assets that you're trading or investing in. Kind of one of the big things that has been up in the air and is still largely up in the air, but we've gotten a bit more clarity on recently is when it comes to some of the unique kind of nuanced features of these crypto assets, right? One of which being what we call a hard fork. So basically, essentially what can happen sometimes is if you don't reach consensus on a certain blockchain, oftentimes the blockchain itself will actually split, right? And so what that oftentimes creates is two different currencies. You have cryptocurrencies. You have the original on the original blockchain, but then this kind of split cryptocurrency. Oftentimes, people that own the original one will also get we'll call it shares or portions of the new crypto as well, right? Almost kind of for free just by holding the original crypto asset. And so what's interesting there is, and the IRS is trying to tackle in some of the recent statements, is how do you actually account for that, right? Is that going to be considered something that's income? Is that more so like a dividend? I mean, obviously, when it comes to the nuances of this space, these are things that the IRS and regulators are trying to tackle in real time because it's simply something that we've never seen before. It's the benefits, but also the challenges to a new kind of emerging asset class. So as of right now, it seems as though it's going to be hard forks and new crypto assets that get either airdropped into people's wallets or whatever it may be are going to be probably recognized more so as kind of income rather than trading these things or having it on the capital gains type tax, where obviously you can take advantage of lower rates if you hold on for longer periods, and depending on what your tax bracket is. So I think that's kind of a little bit of the clarity that we've seen. I mean, depends on, again, kind of what your wealth level is, how involved in crypto you are. There's some people who have been kind of up in arms about it because, again, it's basically them trying to recognize or take more tax revenue from something that, they largely probably don't understand the full kind of nuances of.
Yeah.
But at the end of the day, I think it certainly is at least pushing the ball forward to give people clarity, because it's one of those things that's held people back. If you have to, 2 years ago, if you're trying to figure out during that whole, 2017 rise up of the ICO boom and all that, trying to recognize your taxes and figure out, what you owed and what your kind of base rate was and all these types of things was extremely, extremely difficult, right? What your entry point would be. And it was very, very tedious, and it still is to this day, but we're long story short, slowly but surely getting there where this process can be a bit more automated and people can not spend a lot of their time, hopefully eventually focusing on the actual, tedious nature of recognizing some of these taxes.
Yeah, from your perspective, you talk about in the last segment about Libra testimony in Congress, what's going on here with the Internal Revenue Service. And again, to be fair, a lot of people are trying to figure this out, but we have a very strict regulatory process here in the United States that's, pretty established for all of our benefits. I know they want to get it right, but is there any danger here that the European Union, China, some of these other countries actually supplant the United States and the dollar because of these regulatory hurdles? Is that a real danger in the short run and in the long run?
I think it certainly is. I mean, if you think about just kind of the game theory around creating regulations and kind of limitations around some of this technology and what you're able to do with it, what you're able to invest in, what you're able to trade, how that's recognized, it all adds up, right? So if you have some of these more, we'll say lenient countries when it comes to the regulatory landscape for crypto, I mean, that's obviously going to attract a lot of people who, especially if you're kind of crypto-centric, you're the original kind of crypto enthusiast, the entire ethos behind this was really kind of built on the idea of sticking it to the man, right, or being kind of anti-establishment, for lack of a better word. So you're going to attract, a lot more kind of innovators to those types of regions that have probably not for necessarily malicious reasons, but that have a little bit less scrutiny when it comes to the crypto landscape. I think the other thing that's interesting too, and you bring it back to agencies like the SEC, right, which by and large is there to ensure that your average investor doesn't get duped, doesn't not necessarily saves them from making bad investments, right, because everybody can make bad investments, but really trying to filter out the noise and the scams that can come with the crypto space. You start to see a pretty large crackdown, or at least a few pretty large crackdowns recently on some of these larger projects that actually issued what the SEC has now deemed unregistered securities. And so that's certainly a trend we think is going to continue. And it's one of those things where when we're looking at this space and looking at individual crypto assets, you have to take into account, you have to discount for the potential, regulatory risk that somewhere down the line, the SEC finds these things, as being sold as unregistered securities. And then, whether that's a lot of the things that we've seen so far have really just been fines and, for lack of a better term, slaps on the wrist. And that's okay. I think the SEC really just kind of wants to get a piece of, obviously this developing asset class, but at the same time, there is some motivation there to obviously, protect, the everyday investor.
Yeah. So let's take it back to what we talked about in the first segment when we mentioned that some pension funds, foundations, and does that lack of or more regulatory scrutiny that's involved here, does that detract from some of your clients, potential clients, who are reading your research and thinking about investing in crypto? I know in the retirement space, for example, we talked about it last week about alternative investments, and we're still waiting on some guidance. There's been some fee lawsuits, as you're aware of, because you do the podcast with me, and we've talked about it in the past. But do you think the lack of a regulatory schema, for lack of a better term, deters some of these potential investors and slows it down here?
Yeah, no, I certainly think it can. I certainly think it has actually, because when you think about the wild west of crypto, right, and we've certainly come a long way over the last couple of years, but nowhere near an established asset class like the equity market. I think it has certainly deterred a lot of institutions from getting into this space, but there's two sides to that coin, right? You have on the one end, I think a lot of the smaller kind of crypto assets, or even some of these larger projects that are now coming to market with kind of live products. There's still a lot of, again, scrutiny or uncertainty around how these things are actually going to be looked at or viewed by the SEC. But at the same time, when you look at something like Bitcoin or now even Ether, which is the native crypto asset for Ethereum, the fact that those are now considered, commodities and sit outside the kind of securities regulatory framework, I think has also been a boon for institutions that are trying to look to diversify even away from something like Bitcoin, right? And again, whether or not Ethereum becomes these kind of big smart contract platform, a lot of people think it will, or is the top smart contract platform long term. That's obviously still up for debate, but but I think it does give a bit of a kind of almost regulatory moat to some of these projects that can actually escape the securities regulation, and for good reason, right? I mean, I think Bitcoin, especially, Ether at this point, I mean, they're certainly more traded as commodities than, true blue securities. So at the same time, it kind of depends on which side you're sitting at. Is it good for smaller crypto assets? It's probably a little bit tough to make the argument that institutions will want to get into that space. But more regulatory clarity, obviously, is a boon for institutional investment, kind of at the top of the funnel, because now you have some more clarity around, how you can invest in these things, hold these things with custody, things of that nature.
Yeah. Well, Kevin, great update. Obviously, a lot going on in that space. Appreciate you stopping by the show this morning. Take care, and we'll talk to you very soon.
Sounds great. Thanks, Jeff.
And that wraps up this episode of BRN AM. Hope you found it interesting and helpful and even educational. Hey, have a financial topic or someone of interest that you think we should interview? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, keep on saving and don't forget, roll with the changes.